What's going on, guys? Today I want to talk about smart money concepts and how you can actually sort of predict the future by making alternate scenarios and understanding how the big players are chasing liquidity. And in order to make my point a bit clearer, I'm going to show you some clips of me in the past in videos that I've uploaded on my channel, so you can verify if you want that I've actually said these things. They're all on my channel. And I want to explain a trade because I just got out of my short on the US Canadian and I just reversed because I saw an opportunity that was in line with my video of last weekend, when I was saying that I wanted to get an opportunity to go long on the US dollar because I thought it would show signs of strength. So without further ado, I'm going to play you these small clips, and my purpose is not to brag and say, haha, I told you so. My purpose is to show you how I think ahead of time and how I always look at these highs and these lows and to see where there could be opportunities and where people might be taken by surprise. So let me roll that and then I'll come back to this. We have these two highs that are the current resistance, and what I was explaining in my last video is that I was afraid it would do this again and maybe even take out all the stops here before going. That's very typical in a Wyckoff type of scenario. And I'll see if it penetrates this slightly. I might short that right away because usually these are really great spots to catch stops and traders with their pants down. If you go back to my videos, I've talked about this. These candles were non-existent. I was in the past predicting that we would have a reversal here, and I would think of shorting this point. Why? Because there's liquidity. When there is a high here and a high here, when there is a breakout, the dumb money is going to get in on the break, and the smart money that entered here are gonna get their orders filled with the people that are getting in on the break. So now that trade is over. This move here is over. The smart money is out of that one. So now they're looking for the next trade. And now I think this is the move, because if this doesn't hold, like, it's always possible, if you go in a smaller time frame, you're probably going to see some type of flag. Yeah, here it is. So let's say you do this and you do that. Now we're moving kind of in a range. So now we're tracing the worst case scenario. So let's say we have a measured move. I'm gonna leave it there because I want to make a really worst case scenario here, okay? Let's say this is a flag, which is a continuation pattern, and it breaks on the downside and breaking that trend line. This would be approximately the area where it would stop. Around here. All right, so I'm back in the present, if you will, and I want to show you what actually happened after I said that. And you see here on the 4 hour, let me just zoom in on the 15 minutes or so. So this measured move here coincided exactly with that, and that was not magic. It was simple technical analysis, but also with taking into account what does the smart money need to do in order to get their large order filled, and then also play the opposite of that trade. So we go now on my, I have several systems, but one of them is like a triggering system, and I use daily, weekly, and monthly pivots as entry points, as well as some Murray math with some modifications that I've made. Let me show you what it looks like. So you see here, this line, the weekly pivot, served as a support. And here, these 2 points, the green lines, are the Murray math that I use in order to exit of my short. And then when I saw that the weekly pivot was holding, I went long. So right now, the market is making its way up. What we see here on the 4-hour chart is that we are having some type of trend reversal, with that trend line being broken. So if we go back on the 4-hour chart here, I know that people don't like the black and white thing, but that's how I've traded for years. So this is the chart that I'm seeing right now. So let me just clean things up a bit. So we have a breakout, and then here a lot of people got caught in this zone here. So that was a beautiful short that lasted all week, and right now it went back down, and what I'm guessing might happen now is that we're gonna have good liquidity on the upside now, because a lot of people now went short after this, because they figured, oh well, it's a bounce now, but perhaps not. I don't know what will happen, but I just know that this was an awesome point of entry, because it was based on my technicals, and I saw this coming ahead of time, so I was able to act because I was not surprised by it. So what I want you to take away from this video is that whenever you have a trade on, you always have to try to deconstruct it and say, okay, so now I'm short, but what happens if this happens? Like, what about the next, where's the next resistance, and then the next one, and is there a confluence area where a lot of people could get caught? And that becomes a potential trade for you. And right now, what I'm seeing is a rejection. I'm seeing a type of 5-wave pattern here, and well, three impulse wave and two retracements, and so the structure looks sound. And the fact that so many people got caught tells me that this was stop hunting. So right now I feel really confident about this trade on the upside in the short term. But I don't know how far it will go. But I do know that the next time that it goes through this, it's likely to actually go through before it does a test, and this trend line here might serve as the future support, if you like. So that's a scenario. Now, what about the bad scenario? Because that's what I'm trying to explain, is that I have an idea about a trade, but what happens if something else happens, like it goes here and then it goes on the downside? Then what do I do? And where do I short? And it could do a bounce over here and then go on the downside. These are all the types of scenarios that you have to construct in your mind and spend time looking at the charts. And the best way to learn this is to go onto small time frames. Like I've spent a few years looking at 1 minute and 5 minute charts. So you see these things happen over and over, and there's no other way to train your subconscious mind than to have screen time. Somebody asked me recently, like, what do you recommend to do to learn trading as far as books and things like that? And my answer is open an account with fake money, not real money, because whatever you put in, you will lose for sure. And then look at the prices for months on small time frames and train your brain. That's the one thing that I think you can do, and then learn how the smart money is moving the market in order to get the stops of people in order to get liquidity. So I hope you guys enjoyed this video. I'll see you in the next one.